Hi guys, I am Karla Sy and I am currently taking up the Applied Corporate Management program. Today I will be discussing ACCOB3 Management Accounting and I will be tackling the lessons on job order costing, exercises from the book Managerial Accounting 17th edition by Ray Garrison, Eric Noreen, and Peter Brewer. For the topics, I will be talking about the difference between process costing and job order costing. I will also teach you how to compute for predetermined overhead rates and how to compute for underapplied and or overapplied costs. For the first topic, I will differentiate process costing with job order costing. Process costing is when a company produces many units of a single product. It is when one unit of a product is indistinguishable from other units of a product. The identical nature of each unit of a product enables assigning the same average cost per unit. Now, some examples of companies that practice process costing are the following: Weyerhaeuser, which is a paper manufacturing company; Reynolds Aluminum, which is a company that refines aluminum ingots; and Coca-Cola, a company that mixes and bottles beverages. The similarity of these companies on why they use process costing is because they are businesses who usually dabble in mass production. On the other hand, job order costing is many different products are produced each period. Products are also manufactured to order, and the unique nature of each order requires allocating costs to each job and maintaining records for each job. Some examples of companies that practice job order costing are the following: Boeing, a company that manufactures aircrafts; Bechtel International, a large-scale construction business; and Walt Disney Studios, a company that produces movies and films. Here we have a table that depicts the summary of the difference between the two costs with regards to the number of jobs worked, the cost accumulated by, and the average cost computed by. As you can see, process costing is a single product, while job order costing is many products for number of jobs worked. Next, process costing is by department, while job order costing is by job for cost accumulated by and average cost computed by. So we have a short exercise here, and you could pause the video for maybe a minute or two to answer and test your learnings. Here are the correct answers. For number one, a coal mining company uses process costing since there is only one product that the company looks for, which is coal. Coal is an indistinguishable product in this situation. For number two, a dairy farm uses process costing as well, since just like the previous number, they only produce dairy, and in that situation, dairy is also an indistinguishable product. For number three, the given is a contract printer that produces posters, books, and pamphlets to order. The keyword in this given is the word to order. Going back to what was mentioned earlier, job order costing involves products that are manufactured to order, meaning these posters, books, and pamphlets are unique. Therefore, they also use job order costing. For number four, brick manufacturers use process costing since bricks are indistinguishable products. And lastly, for number five, the given is a specialty coffee roaster company. The keyword in this given is the word specialty. As I said, job order costing involves products that are unique, and many different products are produced in each period. Therefore, this company also uses job order costing. Our second topic is computing for predetermined overhead rates. There are two ways to compute this. The first is based on estimated activity. The formula that we use is predetermined overhead rate is equal to estimated total manufacturing overhead costs for the coming period divided by the estimated total units in the allocation base for the coming period. So one of the questions that is always asked is, why do we need to calculate for predetermined overhead rate since this is not the actual overhead rate? We need to calculate for predetermined overhead rate because it makes it possible to estimate the total job cost sooner, which will help the company or business in understanding their financials, whether they need to cut costs or even find cheaper suppliers. Predetermined overhead rate is calculated using a three-step process. The first is to estimate the level of production for the period, and the second is to estimate the total amount of the allocation base for the period, and the third is to estimate the total manufacturing overhead costs. We have another formula, which is how to compute for overhead applied or manufacturing overhead. The formula is overhead applied is equal to predetermined overhead rate multiplied by the actual activity. Again, we have another short exercise here, and you could pause the video for maybe 5 minutes to answer this. So the given is job WR53 at NW Fab Incorporated requires $200 of direct materials and 10 direct labor hours at $15 per hour. Estimated total overhead for the year was $760,000 and estimated direct labor hours were 20,000. What would be recorded as the cost of job WR53? Making use of the formula, we solved for the predetermined overhead rate first. So that is predetermined overhead rate is equal to estimated total manufacturing overhead costs for the coming period divided by the estimated total units in the allocation base for the coming period. Substituting the values, we got $760,000 divided by 20,000 hours, which is equal to $38. Then we solved for direct labor by multiplying $15 per hour by 10 hours, which is the required amount for job WR53. This gave us a total of $150. Next, we solved for manufacturing overhead by using the formula, which is predetermined overhead rate multiplied by actual activity. So that is $38 multiplied by 10 hours. This totaled to $380. Lastly, we got the sum of direct materials, direct labor, and manufacturing overhead to get the total cost, which is $730. Now, the second way to compute for predetermined overhead rates is based on activity at capacity. Calculating predetermined overhead rates using an estimated amount of the allocation base has been criticized because, one, basing the predetermined overhead rate upon budgeted activity results in product costs that fluctuate, and two, calculate predetermined rates based on budgeted activity charges products for costs that they do not use. This is why they came up with basing it on activity at capacity, since using estimated total units and the allocation base at capacity in the denominator of the predetermined overhead rate calculation would make the total costs more accurate. For this, the same formulas are used. We have another exercise, but instead of answering it ahead, I will be answering it with you guys. So the given is equipment is leased for $100,000 per year. Running at full capacity, 50,000 units may be produced. The company estimates that 40,000 units will be produced and sold next year. What is the predetermined overhead rate? Since we are using the predetermined overhead rate based on activity at capacity, the formula used is estimated total manufacturing overhead costs for the coming period divided by the estimated total units in the allocation base for the coming period. So we got $100,000 divided by 50,000 units, amounting to $2 per unit. The question that is asked is, when capacity is used in the denominator of predetermined rate, what happens to the predetermined overhead rate as estimated activity decreases? The predetermined overhead rate stays the same because it is not affected by changes in activity. This is because this is not an estimate, but the capacity of activity in which the business has. We also solved for the predetermined overhead rate based on estimated activity. We use the same formula as when we solved the predetermined overhead rate based on activity at capacity. So we get $100,000 divided by 40,000 units, amounting to $2.50 per unit. The question that is asked is, when estimated activity is used in the denominator of predetermined overhead rate, what happens to the predetermined overhead rate as estimated activity decreases? The predetermined overhead rate goes up when the activity goes down. This is because the cost per unit is getting more expensive since the company's estimated activity is decreasing. So they have to make up for this through the costs. Our last and final topic is underapplied or overapplied costs. Underapplied overhead costs exists when the amount of overhead applied to jobs during the period using the predetermined overhead rate is less than the total amount of overhead actually incurred during the period. The difference between underapplied and overhead applied is the predetermined overhead rate in overapplied is greater than the total amount of overhead actually incurred during the period. Now to solve for overhead, we have this short example as a guide. The problem is Perco's actual overhead for the year was $650,000 with a total of 170,000 direct labor hours worked on jobs. How much total overhead was applied to Perco's jobs during the year? Use Perco's predetermined overhead rate of $4 per direct labor hour. From the problem, we were able to get the following given for the formula. Predetermined overhead rate is equal to $4. Actual activity is equal to 170,000 hours. The formula used is predetermined overhead rate is multiplied by actual activity, or in this case, actual direct labor hours. We received a total of $680,000. So since the problem mentioned that the actual overhead of Perco was $650,000, we can say that $680,000 exceeds $650,000 by only $30,000. But since it exceeded, the final answer is overapplied overhead of $30,000. Now it's your turn. You may pause the video again for a couple of minutes and try to solve for the underapplied or overapplied overhead. So here is the answer. Using the formula again, we got the predetermined overhead rate, which is $4, multiplied by the actual activity, or in this case, the machine hours, which is 290,000 hours. This gave us a total of $1,160,000. The actual overhead given in the problem was $1,210,000. Given this, we know that Tiger Incorporated has an underapplied overhead of $50,000 since it was less than. And that ends my discussion on ACCOB3 management accounting with a focus on job order costing. I hope that you guys were able to learn from this video and you could utilize this to prepare or study for the finals. I wish you all a good luck and thank you for listening.